Happy Tuesday, everybody. Hi, Rodney. How are you?
I'm good. How are you?
I am peachy keen. Let's see if we
Peachy.
can get this going here. Good. And so there's some exciting things going on in the lending industry here these days, I understand.
It's it's always exciting, Andy. I don't know what I'd do with if I was in just a complacent business.
Well, we've got some fairly shocking numbers that have happened here in the last week. Plus, we're getting signals, and I know you watch it close too, but we're getting signals from Jerome Powell, that he might be hitting us with another rate hike. Are you hearing that?
Mm-hmm.
Mm-hmm.
Yes. Not like okay, it's definite this time, but it's like
Correct.
they're preparing us for like before the end of the year, maybe.
Yep.
Which I think it's this time. I mean,
Yeah. And so far, I'm batting 1,000. So, and I don't know. What do you think? You think he's going to raise it?
I I think he will before the end of the year. But this time, probably so. Probably so.
I have to. Well, there's no bet because I have to agree with you. Hi, Angie. How are you, young lady? How is California this morning? I bet it's. I bet it's fine. Hey, one of these days, we're going to have to get her to take advantage of this. You can call in and talk to us now. So.
Well, that's a weird looking hand that comes in there right there and points that out.
That's
Yeah.
actually that's you could
Yeah.
yeah, you could make that more weird. You could get uncomfortable with that. So now we're doing. My name is Andy Elliott. I'm a real estate agent, realtor here in Williamson County. This is Rodney Wilds. He's a loan officer with First Trust, also Williamson County, Tennessee. This is Middle Tennessee. We service people in this area and across in a certain way across the country. So if you have questions, just give us a call, shoot us a text, send us an email, however you want to get a hold of us. We're available to ask for you to ask questions. And I hope that you'll trust us enough to do that because I'll tell you what, the bottom line is we're trying to be as helpful as humanly possible. That really is our whole goal. And since this goes out to the whole world, we're going to kind of stick to the United States, if that's okay, Rodney. But if you have questions on what we're talking about, feel free to contact us. Our contact information will be in the description box and the comments below. California's 106. Hey, I can relate. We were near 100 the other day. I don't miss that. I don't miss that. I'm sorry to hear that, my friend. Today's topic, and we've changed our format a little bit for anybody that's watched this before. What we're going to do is tend to focus on one topic and cover that pretty quickly, but completely. You'll see what I mean. But there's some things that we still like to do, and one of those things, because it's in the news, is we're going to talk a little bit about numbers today. Is that okay, Rodney?
100%.
Do we have a screen to share with the people or
Let's
not?
see here. I believe I do.
You work on that and I'll do this. That's right. You just gotta love that music.
You just kind of like that.
Okay, hit
Well,
me.
here you go. As you can see, our friends at Mortgage MBS Highway here provide us this great data. Right here was a few days ago, 4 days ago, that we had an alert to lock, and after that day, we've seen quite a bit of improvement. What's good is right here, this line right here, which you can see is the moving average. What does that say? The 3-day moving average. We have got that above that line, which now when we get above it, it provides a little bit of a floor of support for us, and hopefully we'll see those gains in our market stay. We are up 45 basis points. If you see the top of that screen, 45 basis points, pretty significant today. The 10-year Treasury, as you see, when our mortgage rates get better, the U.S. Treasury usually is going down. So there you have it. We had a few good days in a row, Andy. I like this trend. We got a little support as well. Good news.
Okay, hang on, man. Oh, hang on, we're having a technical.
Good. I think it went really smooth last time for some reason. So
Okay, here we are. Bang. Bing. Sorry. Bing. For anybody that's in the Mac environment, I had my MacBook open, and your mouse can go from your regular Mac to your Mac Pro and back, and I lost my mouse. My Mac Pro sucked up my mouse, so I lost clickability for a second there.
Let's talk about closing cost.
Let's do. Okay, we're going to move on to that. So here we go. Oh man, what did you say last week? Hey, I think we got through without any difficulties, and I was like feeling pretty guilty. So today we're going to talk about closing costs, what they are, and we're going to ask the question, because everybody does, is how much do closing costs cost me? I don't know we can answer that specifically, but Rodney, take it away.
Let's go. We'll go through these fairly quickly, and then we have a couple slides we want to share how the customer actually receives and how they actually view these fees and when they can see them and when they're bound and what they can shop for and those sort of things. But just kind of a couple things. Our closing cost, first things, it's separate from a down payment. Okay, all of this is totally separate from a down payment. So your closing, when people talk about closing costs, they're actually separate from the down payment. One thing about closing costs, they have to be disclosed to you in advance. And usually all of these fees are based on the sales price or a loan amount, right? So it's depending on what type of price range and how much you're borrowing is dictating kind of your closing cost. And then why closing cost? It's actually pretty cool that you see a lot of different companies, and we'll show that as we go through it on your closing disclosure, the different companies that get paid during this transaction. There's a lot of work being pulled in from a lot of different resources that go together when you purchase a house, and we'll get to see that a little bit. And that's why those closing costs are there, is just kind of get everybody paid up on all the services that transpired and what it took place to get that home to the closing table. So, all right. Origination fee. Origination fees are basically a fee from the lender. It can be associated, 9 times out of 10, it is associated with a rate. Meaning if the higher the origination fee, potentially the lower rate you have. Okay. So an underwriting fee and a number, you could, lender fee. Basically, that is money for the lender to offset some of the costs that they incur to originate the loan, to underwrite it, to process it, and those sort of things. Appraisal fee is just what that is. It's a fee that goes directly to like for us, it's a direct pass-through fee. If the appraisal charges $500, we pay the appraiser $500 if that's what his invoice was. Title search fee. A title search fee means basically you're going to have an attorney pay someone to go back and make sure the title on the property is free and clear of any liens other than what you're going to put on it. And then right behind that, the title insurance. That is insurance when you leave the table, that you've got an insurance policy in case someone ever come back to you and said, hey, we installed an air conditioning, the previous owner didn't pay for it, you owe us the bill. Attorney fees are just for them to go over the title stuff, to go over all the loan documents that are there, and to assist with any questions and make sure it's it's recorded and the title's good and all that thing. Escrow fees. Escrow fees are pretty much escrow is a word used a lot in our language, in our real estate language, but escrow fees are, when we're talking about them today, we're talking about your escrow fees are going to go into a separate account to pay your taxes and insurance on the property. That's what your escrow fees are, is future taxes and insurance for your property. Recording fees, same thing. Same thing is kind of like your title. The attorney's going to handle this. They get charged to record your new note and deed of trust, and that's kind of like your estate tax when you go to the grocery store, if you look at it like that. And of course, a survey fee, if you have a survey, is just the fee for the surveyor to come out and give you the measurements or give you what's called a stake survey, and things like that. That's what that survey fee would be for.
Now, there's also going to be different things like homeowners insurance is going to be laid in there, correct?
Correct.
Yes.
Homeowners insurance and
prepaid taxes.
And you'll see when we go through the loan estimate, there's stuff like may fall under the origination fee or other fees that are just labeled like escrow fees or whatever, attorney fees and things like that.
Right. And there's also differences in lender's title and owner title, right? And there's huge difference in that.
Yes, they and you'll see on my form here, it'll say optional, but I've never seen a lender or an investor that has it optional.
Got it. Okay.
It's like you get to choose what day you want your house payment on if you choose the first.
Oh, here's an excellent question. This is a good one. Hit me.
Yes, they would be. Let's look at this, for example. If you're paying cash for a house, you're not going to set up an escrow account. So you're not going to have any escrow fees at all. Okay, so you're just going to pay your annual insurance right then, and you'll pay it as you go. These you won't have like this appraisal fee. You wouldn't have that. You wouldn't have an underwriting charge. You wouldn't have an origination fee. So basically, we would find you an attorney, and the real estate would help you select an attorney, and then they would just prepare the docs for you, and there would be a charge for that. And then however you wrote your contract, of course, depending on who paid for the title insurance, if you would have that fee or not. So it'd be very minimal cost if there's no loan involved. Most of these costs are associated with a loan.
The difference is when somebody's buying cash, for me as the agent, the negotiation is completely different when you're negotiating to buy the property. And when you go to the closing table, under normal circumstances, the way it works is a seller only takes about 20 minutes to sign off, to go in and sign off to sell their house. That's a seller. A buyer with a loan, it can take, depending on the number of questions that they ask, half an hour. If they have a lot of questions, it can take as much time as it takes. But for a buyer that's buying cash, it's actually less time than even the seller, because there's just, it's that like very few documents. It's super slick. Super slick. Yes. Seller paying closing costs again. Flesh that question out for me.
Let's see here. Seller paid closing costs. Okay, seller, let's, in today's market, and Andy, you chime in on this one. Today's market looks like we get a little bit, we can go out and we have time to ask and look at a property and say, hey, we could probably negotiate and ask for a seller to pay for something. If, depending on, just assuming it's a regular run of the mill purchase, you could go in and say, I'll pay you $500,000 for the house and you pay $10,000 of my closing costs. It's just a number you can negotiate. Obviously you'd work with your lender and say, we've got $10,000 in closing costs. And that would get you in for, when we have our consultation, we're going to be talking about, well, how much money do you want to get into the house total? Because I know there's a difference between a buyer when I know there's a difference between closing costs, prepaids, and down payment, but you may not, the customer may not. So I'm like, well, how much do you want to spend total when you get into this house? And so then we start backing out, okay, we talk about closing cost and the down payment to get them to that number. And then so we just negotiate it with seller. We just agree, we just ask the seller to pay it. And it's, I don't know any better way to explain it, but if we're going to pay $500,000 for a house, say we agreed to pay $500,000, you just go say I pay $510,000 for it, and you pay $10,000 of my closing cost.
Yeah, now that you can do that. Just these days, you have to be a little careful if you're bumping heads with appraisals and things like that. Rolling that extra dollar in there because it may not make it. So,
correct.
Here's the bottom line on closing costs. In a seller's market, asking for closing costs can be like a death knell. I mean, if you're a buyer wanting a house, asking a seller to pay for closing costs in a seller's market, chances are pretty good they're not going to look favorable on that. However, what I can tell you consistently, and I've done this for an awfully long time, the first closing expense that I will ask the seller to pay if I'm working with the buyer is the title insurance, because title insurance can be several $1,000s. If it's I could look it up, but if it's a $500,000 house, say it's $1,900, something like that. $1,900 for the lender's title and $35 for the owner's title. When I send the contract in, I almost always ask the seller to pay that title insurance, because that's the logic on there for me is that if I'm buying your house, you make sure to me that it's clean, that there's no liens, that there's no dishwasher's been installed that you haven't paid for and stuff like that.
Right.
On the flip side, if it's a seller's market, I keep saying that because that's the point. It's my buyer's, if I'm buying, it's my responsibility to pay for home insurance and so forth and so on. It's not, I shouldn't make it their responsibility. And usually you'll get away with that. So you'll save several $1,000s with that just alone. Did I go on?
Yeah, I like that tactic from you right there. It's a check of a box instead of a number if you do it the way you do it. If you go in there and you ask for it, you put a number beside of it and just check the box like you're talking about. I like that.
Well, for us, it's a line item, so it's seller to pay. Yeah. It's not actual thing, but usually, if you're trying to get a deal and the house, sellers see that as reasonable, and it's when you start asking them to pay for your stuff, they start getting ouchy and start to wonder about you a little bit. But we'll get into a whole negotiation thing. We'll make that as a topic.
Yeah.
Okay. Sorry, I didn't mean to get off on that.
If you want to share that first loan estimate, we'll go through.
Got it. There we go.
All right. I'm showing you an example of just a loan estimate that would be provided to a customer once they applied. And the loan estimate, when I say it has to be disclosed to the customer, the customer has to get this. Now, I will say, if you look up here and you see the rate lock in the very top right-hand corner at the bottom of that paragraph, you'll want it to say yes and then through whatever date you're closing. But since this is not really locked, it's just a dummy file here. It's not set. But that's one thing a customer is going to want to check is, Have they locked a rate? Is it good through a certain date there? So we'll just run through these. Loan amount, self-explanatory, interest rate, monthly principal and interest payment there. And then we go on down years 1 through 12, 13 through 30, and you see this one has mortgage insurance on it right here. So I want to just have everything included crazy on an estimate you could have here. So you'd see that you had $92 of mortgage insurance on that. The next section down here, estimate includes property taxes and homeowners insurance. Yes, both of those are in your escrow account, and that would be $500 one monthly for your escrow. Now, you see at the bottom of page 1, you see estimated closing cost and then estimated cash to close.
Mm-hmm.
So we'll go to page 2, and this is where it itemizes those figures. Origination charges. This is where you see the lender's cost associated with a rate. Okay, so this is where you need to shop. This one charge right here, this section A, if you went and got Andy, you wrote a contract with somebody and you went to 3 different lenders, this section A would be different with 3 lenders, but the rest of the form would be almost identical or perfectly identical, because the title company is going to be the same. The taxes are going to be the same. Their insurance company is going to be the same. So all that's going to be the same. So the really shopping right there, your origination charges on this estimate would be the way to go in that right there.
Okay.
Now I'll tell you, once I disclose this, Andy, it cannot change. Did you know that?
No.
Once I send this out to a customer, I cannot change that fee.
And how early in the process do you disclose this?
As soon as they have a property, as soon as you
Okay.
get a contract, it makes it an application, and then once it's an application, this is one of the forms that has to be sent out. Now,
all right. So I'm going to replay that just a second. I go out and I work with the buyer. We find a property. We put an offer in. Do people ever ask for loan estimates before they get an offer accepted?
Yes, some do. Some have been shopping do. Yes. I normally send what's called a closing cost, just a spreadsheet of all my costs and what the current rates are and things, because I don't have this form filled out, because this is in our system.
Right.
Unless I have them in there ready to go, I wouldn't be able to produce this. But I could as soon as they applied, and we could provide this without a property, but it wouldn't be locked, right? So it's not binding.
It's sort of a theoretical thing at that point. Okay.
And so I give them just an Excel spreadsheet until we get something that can be binding.
Got it. Okay.
So in section B, we talked about those fees, but see, like your appraisal and your final inspections, they say, okay, you cannot shop for these services because of our appraisal requirements. They have to go off a rotation, so it doesn't really give a customer the chance to shop for those. And whatever those fees are is a direct pass-through. Like, we can't make money off those fees. Like, if the appraiser charges $500 or $700, that would be what it would be charged.
Got it. Those are pass-throughs. Okay.
Now, if I don't disclose $700, like if the appraisal comes in at $700 on this one, since I only disclosed $600, we would charge $600 there.
So you're saying if there's a mistake made on the loan estimate, you eat it.
Anytime there's a mistake, or it's actually what they call as a tolerance cure. You can only be within certain tolerances of some of these sections, and some of them can't change any. Some of them can change by like 10%, and some of them, like the services, the C section can change as much as it needs to change, because they're not controlled by us.
Got it. Interesting.
So you go down to the services you can shop for. You get your CPL, your closing protection letter. your dog prep, and then the lender's title insurance. You see there the big $3,300 charge, and then the title settlement fee or attorney fee to close the loan. So what we do there, now there's one other fee over here. It's we'll go on this side. At the bottom of it, you see the total is $10,950.
Yes.
And then the other cost, taxes and government fees, this is just your recording and your transfer tax. This is basically when you record your note and deed of trust and all with the courthouse and all that. So it's legal, binding, all that stuff's in there with your mortgage, your note attached to you and the property.
Is this the same as a tax stamp?
Yes. Back in the day, they used to actually put stamps on these on their records, and that's kind of how it was caught up. That was their accounting or bookkeeping record, right? Obviously, we're past, putting a stamp on something. So they record it, obviously, the electronic record now.
Okay.
The second next section, section F, is your homeowner's insurance. Now, the customer goes out and will shop for their insurance and get the best insurance they can, provide it to us, and then we pay that at closing for them for their first year. The next line is, say if they close at the 15th of the month, they'd have 15 days of prepaid interest. So that would be part of the closing cost as well.
Okay.
Next, you go down to your homeowner's insurance, just exactly what it is. This is where you're setting up your escrow account with your property taxes and insurance. The next line, H, you have your title insurance. They call it, like I said, it's not optional. Every lender requires it, and it makes sure you have a free and clear deed to the property outside of what liens you put on it.
Right.
Now, we just add these fees together. Total closing cost, and then you see down here total closing cost, down payment, funds from buyer, and then minus the deposit. That's down there, that $5,000 in the bottom right would be where you would get credit for your earnest money. And then the estimated cash to close there would be what you would need to write a check to the closing.
And to be specific, just for anybody that's not been through the process, or it's because that's a lot of numbers, that's a lot of line items. There is a difference between closing costs and down payment. Just going to say.
Yes. So now that is the loan estimate, something you get immediately within 3 days of application. Okay. So if you want to go to the first page of the closing disclosure, this is where the government says, with this past form, the loan estimate that you've seen earlier, this one matches it, except this is what you see at closing.
Now, just to be sure, we're looking at the last page of the first thing we were just looking at, and it matches this.
Well, actually, I'll show you where it matches. It matches in the sense that it's formatted the same. If you look at it, you can kind of say, hey, it's a similar form or almost an identical form I had earlier as the loan estimate. The closing disclosure you have to get, that's going to finalize all your closing costs. You have to have this 3 days before closing. And so you can see that the fees that you originally quoted are actually the ones you're going to close on. There's no funny business. And it's a very similar exact first page, but let's go to the second page on the closing cost detail. Now, you see all of these are similar, but except now we see a seller line over there that you would see when the seller's involved and they have their numbers in there. One thing I'll point out down in the other cost section is that when you buy a house from somebody, you'll see a tax credit coming to you from that seller, and it would be on this form down there as well. That way it's not on here because I didn't have a seller info, but you see all the same fees are listed here. Now they're identical because there was no change to the form there. So we'll go to page 2 of this of the CD,
Do you mean
and
we're on to?
or I'm sorry, page 3.
Got it.
Now this is where in the top left you would see the loan estimate. They're all zeros right there, and then the final would be right there. This is where you would actually compare, if you wanted to, the differences in those numbers, and you could actually go and find every penny that was different if you wanted to do that. I look at it because we have to be in a tolerance, so I always look at it. But this is where you would look and see as a buyer, okay, they quoted me this is what it turned out to be. And then you'd see all the numbers below, and this is kind of where it makes sense. And if it did, it should. If it did, you'd just, you'd have this 3 days before closing, wire your money, and all would be good. So,
and I'll still say that for all the years that TRID has been in force, initially when that happened back in 2014, something like that, it scared everybody to death. But that turned out to be the biggest. I'm more grateful for TRID than almost any of the laws that they changed, because God bless anybody that goes through one of these transactions. It's big, it's important, and it can be stressful at the closing table. And trying to do math when you're under stress isn't a good formula for success. And TRID means that you've looked at those documents in a calm environment where you can think.
yes, they basically, the biggest change is that we had to deliver, as lenders, we had to deliver the closing cost, the loan estimate within 3 days of application. And then there was tolerances on the fees that we quoted. So they're basically saying, hey, you're in the business, you know what fees that you have. If you don't get it right up front, there's no correcting it. You just got to get it correct up front, and the customer knows what they're getting, and there's no funny business and changing fees and all that stuff. It used to happen a lot. People would get to the closing, and a bad lender would change the terms for whatever reason, whether it's on purpose or not, and the customer's just in a bad position and almost forced to close at that point. So,
right. And is there anything on page 4 and 5? Yeah, the rest of it's just
no. Excuse me. Not really related to the fees. It talks about assumptions and prepayment penalties and stuff like that, but really, it's just about the cost. Having the cost presented to you, and you look at them and being able to compare a couple different companies, and in a manner which you're protected, I guess. So
yeah. There's 3 great. Thank you, Rodney. That's really good, and it should be comforting to somebody that's going through the process. If you're a numbers person, because there's different types of personalities, and some are numbers people where every penny has to add up, and there's others that don't concern themselves with that at all. What he just showed you was the money that you'll be spending and the property that you'll be buying is clearly laid out, and you'll have time to go through it with your lender on the front end with the loan estimate and the closing docs at the other end. So you should never feel pressure to do something without having good information is kind of my point.
yes, there is absolutely no reason in today's environment for a customer to be confused about this. It's one, we have to provide it to them, and 2, we can't change them. There's a lot of stuff that can't change. You would have to go out of your way to not inform a customer right now. You know what I'm saying? They're making it hard not to do it.
I think that they've done a great job. Just deals falling apart has really dropped to an almost negligible number. Now, it's important to the people that it happens to, but still compared to what it used to be.
There was several nonsense come out of Dodd-Frank. Okay. But this right here, when customers get stuff up front 3 days before closing, I love it, because our whole industry, you give any industry an opportunity to try to do something at the last minute, and they're going to do it at the last minute. And ours is no different. Now
100%.
it's just we have to do it earlier, and I love it because it reduces a lot of stress.
And for me as a real estate professional, one of the things that I decided early on, because the lending business, and there's just several questions down here I want to be able to address, if that's okay with you, Rodney. That's
Oh,
okay, right?
100%. Yeah.
There's a lot of, as a real estate professional, I'm not a lender, and I tell people that up front. There are those who throw numbers around that are in the real estate business that throw numbers around, and they sort of act, and I don't mean this disrespectfully, but they sort of act like lenders. And for me and my clients, I don't take that. I don't do that because things can change on a daily basis that I'm not paying attention to. That's Rodney's deal, to pay attention to that stuff. And when those deals would come to a closing table and the numbers would be wrong on the lender's side, whatever it would be, it may not be anybody's fault, just an adjustment needs to be made. They're asking me about this stuff, and I don't have an answer. That's the lender stuff. When people call with numbers questions, I always say, that's a Rodney question. That's our big thing. It's a Rodney question. And it doesn't mean that I'm stupid. It just means that I'm not up to date on the lending rules and regulations as they change. Just not. And I'm not going to guide somebody down a path that I don't understand. That's what that is. So again, the TRID thing is really good. So we've got 3 questions here. Did you have anything to add before I move on?
No, that was well said.
Philip had a good point. Most people believe that realtors' fees are a part of closing fees. Boy, we've got a...
Man, I'm telling you, he's exactly right. I've seen that so much. It's unbelievable. It's been this way since Fred Flintstone. And he's exactly right. I do not understand how folks do not understand that. But I continue to try to tell first-time home buyers, hey, find a, what I tell them if they're working with me. But any advice I give to anybody, don't call no offense, but don't call the yard sign. Get a trusted realtor that can represent you, because the fee's already built in. It's a whole nother show, but you're right. It's
but I'm gonna interject a couple of things, and I won't get too deep into it. It is a closing cost for the seller.
Mm-hmm.
It absolutely is. And there's lawsuits in the works right now that could be changing the rules for buyer's agents. And that's where you're going to see the reason people always ask, and I don't know this directly, but in the answer is implied. People ask, why are sellers, and these are what these lawsuits are about, why are sellers always responsible for the commission for both sides of a transaction? And the reason is more practical than you think, is that if the time ever comes that a buyer is responsible for the commission to buy a house, that's going to knock out a heavy percentage of buyers, because they're, I'm going to say struggling, is that the wrong word? But you've got, what do we just go through? $39,000 to close a $427,000 house with Rodney.
Affordability issues we've been talking about for 2 years.
Yep.
And if coming up with down payment is affordability issues.
And if you try to add a buyer's commission on top of that, that's just going to knock people out of the game. It's just, right. That's what's going to happen.
On top of closing costs that we just covered too.
That's
right?
what my point is, at that point, it would be a closing cost, because it would shift. I call that accountability. I don't know if that's a right term, but it shifts it from one side to the other. And it would be a closing cost thing. Now, people will say, well, just roll it into the loan. Well, if it doesn't appraise, you can't.
Right. Yeah.
I mean,
that's a great suggestion, except in the last 15 years when we've been in an increasing value environment, and appraisal is hard to keep up.
Yeah. And so there's going to be a lot of, people, it's going to cause problems. and it's going to cause issues because sellers are going to think that they've got, and I'm not lobbying one way or another. I'm just telling you how it is or how I'm predicting this will be. Sellers will think, yay us, we don't have to pay that commission anymore. Are you going to be saying that when there's literally no buyers coming to your house? You're done.
Right.
You know, you're saving no money because you're not getting any.
Yeah, I've seen where that's coming up. I think it's in even October, November. That's supposed to be
That's when the
somewhat.
case will, and we
Yeah.
expect it to settle out of court, which I don't know what that means.
Well, you
But
got 30 days now.
yeah,
You know.
yeah, well, and it'll be years before that happens. But I just wanted to address that specifically because down the road, if these things take hold, it will be a closing cost for the
It's
buyer.
going
And
to
then
be a different world. Yeah.
and what's going to happen, it's like anything else. If it shifts this way, and this is just me, I'm just thinking out loud, so you can hang up on me if you want. If this change takes place, there's going to be an unintended consequence, which is real estate is going to stop. It's going to stop because the buyers are going to go, well, I'm not doing that. I'm just not going to do that. And then all of a sudden people aren't selling their house. And then people are going to have to come up, probably come back to the same solution that we've had forever that worked, because all of a sudden home values, that changes the rules on home values. Good God. It changes everything. It really does. Next question. And I'm going to take Angie's first question last. So I'm going to go to her last question first. If a deal falls through due to you lose your earnest money. That depends.
Yeah.
Earnest money, which doesn't have to be very much, is simply so that you're telling the seller that you've got skin in the game. But in Tennessee, and I can only speak to Tennessee, we've got contingencies that we have to clear. So when you buy a house, you say, I'll buy your house, but if it doesn't inspect well, if it's got problems, I'm not buying it. And so you're going to have inspection contingencies, appraisal contingencies, which is back on the boards. It's back to being important. And finally, you can have any contingency you want. This is America. You can have contingencies on the barometer pressure, the mean barometer pressure in your neighborhood, whatever. But normally,
and there'll be a big one in there with financial contingency.
And there's going to be a big fat one with financial contingency, which in Tennessee stays alive up to signing the documents at the closing table. Now, you have to waive financial contingency on purpose to eliminate that. You have to do that specifically. But those are all the contingencies. They have the inspection, you have the termites, you have whatever. If any of those fail, you go, I'm out of here. I don't like that. You get your earnest money. Now, to answer your question, if you say we are good to go and you bail, then you will lose your earnest money. And if they want to take you to court, they could breach you for performance or something like that. People back in the day, they don't do it anymore, but they would try to talk their lender in. And I'm going to close your ears, Ronnie. They'd try to talk lenders in to give them a denial letter if they decided they didn't like the house. Well, that's
still do. People still have.
And I'll tell you what, you don't want to be standing in front of a judge not being able to prove that, because then you'll have something else instead of breach of contract as problems, So because people think you can just make it up. And there's a thing in contracts which you'll be going to court for, called in good faith. So if you are in a contract, you decide you don't like the house and you sabotage it for some reason, and there's probably more than one way to sabotage things, you don't want to be on the side of the table when the judge says, did you do this on purpose? you just don't, don't mean to go on like that. I'm just passionate about that. Don't mess around with in good faith, because that's what that means. So if you have a good reason to get out, you get your earnest money out. If you don't have a good reason to get out, you've bought the house. Is that fair, I think,
Pretty
Rodney?
good. Yeah. Yeah.
Okay. Now here comes the big one.
Do you actually, I hire new new people into the business and train them as mortgage originators. Usually they have a college education, but that's definitely not required. And then, but for everybody else in the world, I don't know what they have, and I don't think there's a lot of training. But what we do is we do about a six-month course that we put them through, and that's usually after college. Like, I haven't taken anybody that's younger than that, but it seems to be if I get somebody out of college a few years after they've had at least one good job, and they're really ready to start a career, that's the kind of people that I have success with. And we just go through a 6-month training that starts them basic from definitions all the way to sales stuff. So there's really not anything set in stone. The only thing is required from federal is just your NMLS registration. And if you work for a bank, you get that just because you've been employed. Now most banks do a lot of training on Bank Security Act and Patriot Act and things like that. But for a mortgage company, you have to go through the NMLS registry and take the test and get licensed in the states you want to do business with and things like that. So that's a good test and that's a good thing to do. But there is not a kind of, for me, it's about 6 months, and it takes about a year for them to get going. So it's the 6 month is just a training. The next 6 months is just them working kind of with me, or however you want to call that. It's there's two pieces of this business. There's a sales piece, and then there's a numbers piece. The sales piece is the difficult piece. The sales piece is the one where you develop relationships and bring in your own business. The math piece is the easy piece I can teach.
It's the client crying on the other end that's difficult.
Well, it's Andy, how it is if you're in this market, and you're a new loan officer, you just have to go out and develop relationships and find realtors that trust you enough to put their paycheck in your hands. That's what it's about. I mean, when a real estate agent trusts me with their deal, they're saying, "Hey, Rodney, I trust you with my money." I mean, it's a big trust to get that referral. So we just try to be ready when we get it. So
yeah, that's
now,
excellent.
hey, if she's we can teach her that stuff though. I mean, if she's outgoing and not afraid of anything, you see these young people. I mean, I see them all the time. They just, I don't know how you describe them, just full of life and never meet a stranger. Hey, they can learn this business and go out and do a great job for people.
Yeah. I'm sure she'd be great. Move to Nashville. You can make that happen. Have her move here too. That would be great. Rodney, that was just excellent. I can't thank you enough for putting in the homework to help us get through those closing costs. Because you know what? That is everybody's number one question. It's what's the house cost and what's it going to cost me to get out of this thing,
Right. Yeah. A good rule of thumb, somewhere around 3% of your purchase price is your closing cost. Today, you want to just really look at all those closing costs, like origination points and things like that. We didn't get a whole lot in that, but some of those you might want to stay away from origination points and see what the value of that cost is. But that's it, man. You get just get you a loan estimate, and that's how you shop.
And the bottom line, and I'll leave it on this, is for me, because I'm not a spreadsheet. I can read spreadsheets really good. But when it's my stuff, I kind of stop. I'm not able to absorb information quite as well. And that's when I go to Rodney and I would say, what does this mean? Interpret this for me. So that's what this is about. Hey, listen, thanks for your time today, Rodney. Any final thoughts there, buddy?
Thanks for everybody showing up. Thanks, Angie. Yeah, hey Angie, if she wants to get in the mortgage business, tell her to call me. I'll be glad to help her.
Absolutely. Phil, Wendy, thanks for being here. And as always, thanks a lot. For anybody that's watching this after the fact, if you'd like to get a hold of us, our contact information is in the description box and it will be in the comments section here shortly. So listen, everybody, thanks a lot. Talk to you soon.